Well, when this came up, the CARE Act, we saw an incredible opportunity to enable private Christian schools to take advantage of these great resources. I want you to also know something else too up front. We do not charge for our work, and we also give support for schools out there that need the assistance, whether or not they're supporting us. I greatly appreciate those of you out there who support our work as a nonprofit ministry, but that's not what we're here for. We're here to serve you unconditionally, completely for God's glory, and that's what we're here for. So if you have questions as we go through this, please let us know. We're also going to have a conference call next Thursday at 2 p.m. At 2 p.m., we're going to be dealing and addressing those questions that we weren't able to get to today. But this is going to be a very important time because we're going to cover a lot of information that's going to be very helpful. Also, if you thought, gosh, that was great, but I had a question on slide 9. I just didn't know what was going on. I missed it. Good news. Tomorrow on our website, pacificjustice.org, you can take a look at the video again, this presentation again, along with a lot of very helpful written materials and information that's going to be available to you at that time, all without charge. We never charge for our work at Pacific Justice Institute. And then if you need assistance, we provide legal representation in court. We pick up all the costs, all the expenses. So please make a note after this is done, after the CARE Act's over and everything else, make a note of our organization so we can serve you down the road if necessary. Nothing breaks my heart more than to hear of someone who said, oh yeah, several years ago we should have contacted you because this is what happened. So take advantage of our resources. We're here to serve you and fully and unconditionally. Now, we have with us here for the presentation an attorney, Emily Mimna, who's very, very skilled as an attorney. A little bit of her background. She got her undergraduate degree at Yale, dealing with religious history. She then got her graduate degree at Cambridge in dealing with some of the same issue of history of the law and religious history and history of the law. And then she went to University of Michigan, one of the top-ranked law schools in the country, and her specialty, by God's grace and providence, was finance law. Yes, finance law. She worked for Citigroup and also worked in London doing international financial work. And she came on board by God's providence a year ago to our team at Pacific Justice Institute, where she heads up our office in the state for the state of Nevada. She's here, and she's going to go through a PowerPoint presentation. And I make note of it. If you want to take pictures of it, one of the pages, you can. But I encourage you to remember that this will be available online, and also forward this information out to other private Christian schools and churches, for that matter, or even business owners, to make sure they're aware. We have one customized for business owners. We did that presentation at 10 a.m. this morning. That'll be on the website, as well as one at 2 p.m. Today that's going to be available for churches in particular. But this is focused primarily for private Christian schools and educational institutions. So, Emily, are you there?
I am. Hi, Brad. So hopefully you can see I've just shared my screen with you, which is why you can't see me. But so we're looking here at legal considerations for Christian schools in relation to the CARES Act. First, the disclaimer is the caveat. Basically, especially with regard to financial, tax, or investment decisions, seek professional counsel related directly to your specific situation. The fine print is all there. I'll move on. Thank you, Brad. Also, this is Kevin Snyder. He's our chief counsel, who will also be available for your questions going forward. I work for him and for Brad. That's me. There we go. Okay. The background of CARES, what are we talking about here? As obviously everyone knows, we are in the midst of the coronavirus COVID-19 pandemic, response to which Congress has passed a series of legislation. We're currently in what they're calling phase 3. That's the CARES Act. But first we had phase 1 and phase 2. Phase 1, the title there on March 6th, really addressed equipping federal agencies to respond. Phase 2 was the FFCRA. That was on March 18. Also important for churches, businesses, and Christian businesses and schools. So I want to mention that here, though, we're going to be focusing on the CARES Act and really looking at ways to secure funding. And I also note here, phase 4, people are already raising concerns about, is funding going to run out? You may know 2 days ago, the president has already requested additional funding. So that is hopefully in the works. They're calling it CARES 2.0. We don't know what that will contain, assuming it gets passed at all, but that is looking towards the future. All right, the CARES Act. What does it do? The CARES Act authorized an unprecedented amount of funding for corporations and businesses, particularly small businesses. And you can see here the distribution of the money, the relief amounts made available. That is all in billions with a B. This is from the Wall Street Journal. And I would just note the small business loans, that's what we're going to be focusing on here. And as I'll discuss, that is going to be available to your regular mom and pop shops and schools and even churches. So also of interest, as you can see on the left, unemployment insurance, tax deferrals, deadlines, also tax credits, and aid to states, which we'll discuss at the very end, specific for schools. So how do you get this money? Who's administering all of this stuff? It's not your congressman. It's not actually even the SBA. It's administered through them, but we'll get to that. So here you can see their logo. That's the U.S. Small Business Administration. If you go to their website, that's what you're going to see. And these are the 4 programs currently authorized through Congress, and they're being administered through the SBA. So again, that's the person, the entity, I should say, that's administering this. And the 4 main programs that you can see here are the Paycheck Protection Program, or PPP, the Economic Injury Disaster Loan, EIDL. So if you hear people referencing that, that's what they're talking about. The SBA Express Bridge Loan and the SBA Debt Relief. I'm not really going to focus much on the last 2, but I want you to be aware that those are out there. So really quickly, the PPP, Paycheck Protection Program.
Emily, real quick, I want to slow you down a little bit here. The Paycheck Protection Program, that is the one that has been talked about on the news, correct? I mean, that's the one that's getting most of the attention and most of the focus probably for these private Christian schools right now at this time, right?
Yeah, that's correct. That's what we'll jump in there on that. That's exactly correct. That's the one where people are asking a lot of questions. If you're seeing in the news about small businesses going to banks looking to get these unprecedented amounts of money, yeah, that's the focus here. And that's the most immediate way I know of through the CARES Act that schools, Christian schools specifically, can obtain funding. So we'll focus on that. When you do fill out if you fill out your PPP form, you will see a reference to the EIDL. So if you have one of those, you should know what it is, but I just want you to be aware of that. So how do you get the money? What is it? PPP is the $349 billion that has been authorized by Congress to provide loans of up to $10 million. That's $10 million for each applicant, which includes, again, schools. And what types of businesses can apply? Well, small businesses, which we'll define, but that also includes for-profit and nonprofit organizations, also independent contractors, and even self-employed individuals. And the independent contractor section has raised some questions, and independent contractors can apply themselves for these loans beginning tomorrow, April 10, and the same for self-employed individuals. They are eligible.
Okay, Emily, I want to just take a pause here. I think what's important for these Christian schools to realize, this is unprecedented, folks. This kind of federal government financial assistance to private religious institutions, churches, private Christian schools, this is unprecedented, yet it's constitutional because there's not a particular religious group that's being singled out or benefiting from it. It's benign neutrality, and the reason I'm mentioning it is because it's been heartbreaking, but to hear like some churches say, "Well, we know it doesn't apply to us because we're a church, or we're a Christian school, so it doesn't apply to us." it does apply to you. This president has actually implemented that and put this in so that it will apply to religious institutions. This is unparalleled and yet very important because of the degree of financial support we're talking about. Okay, go ahead. Thank you, Emily.
Yep. So again, nonprofit organizations can apply. What are the eligibility requirements? You needed to have employees as of February 15 this year with business operations. Small business, typically we're talking fewer than 500 employees. There are also some other exemptions or exceptions you can see at the SBA website to see if you qualify. And most importantly, you need to have been impacted by the coronavirus economic uncertainty. And we'll come back to that. And I think because this is intended to get money quickly into the hands of businesses, including schools, it's a very broad term, and that makes it generally applicable. And again, what types of businesses can apply? Profit, for-profit, nonprofit, independent contractors, self-employed individuals. So what do you have to do to make this certification that you are eligible because you've been impacted? Well, this is quoting here. It says you have to certify that the current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. And you need to also certify that the funds you obtain will be used to retain workers and maintain payroll, which makes sense if you look at the title of the program, Paycheck Protection. And you need to be aware that loan forgiveness will be subject to a couple of limits, which I will definitely zero in on for you. And only 25% of those forgiven amounts can be non-payroll. And again, since this is payroll focused, it makes sense that the bulk of the monies obtained need to be spent on payroll.
Okay, Emily, when you talk about, you said the current economic uncertainty makes this loan request necessary. These Christian schools out there, right now, they're in their situation. They're receiving. Some of these Christian schools say, "Hey, we've got the students. We're receiving their payments." What are some of the things that you think are necessary qualifiers for it to be necessary for a private Christian school in this circumstance?
There's a number of factors. In the first instance, all of the adaptions at first school that you've had to make to work remotely or let your students learn remotely. Not all schools are set up for that in the first place, certainly not at the scale. So there's going to be costs there. Questions of schools being shut down or having to switch to this remote learning process. Reduction in what we call revenues in a business context, but if you're having decreased revenue, it's not a standard, it's not a fixed standard. You don't have to meet any dollar threshold. You don't have to be on the verge of filing Chapter 11 or be in dire financial straits. It's just a good faith certification. And from people I've spoken to and everything I've read, it's being taken at its word that it's just that. It's meant to help.
Okay. Very good. It's very, very broad. And I know private Christian schools have definitely taken a hit in multiple ways. And so I just want to make that clear. So I don't want any private Christian school to be too hesitant on this because of this language. They know their situation. Bottom line, it's very broad, and they should not allow that to prevent them from moving on and to looking at their other elements for qualification. Okay, go ahead. Thank you.
Yeah, no, absolutely. I would say this is a knock and it shall be open type situation. Again, good faith.
Yeah, good.
And this last bullet point here is something we'll come back to as well, but there's some uncertainty about, can I apply for the loan if I have this business and I also have this business? So you can have one loan per entity. So if you're an independent contractor, you can apply for yourself, but you can't then also be counted by someone else. And really, you can see here what they don't want is duplicative persons being represented in the program. So if you've already applied as one entity, you can't, make subsequent requests as the same entity going down the road. You have one application. what are these qualifying businesses? Small business administration makes sense. It's 500 or fewer employees. I've got the definition here for you of how the SBA actually counts this. It includes full-time and part-time. And as I mentioned above, it excludes independent contractors. That's under the Fair Labor Standards Act. Affiliated businesses, as I mentioned, will be aggregated together. So that total sum would need to be under 500. But here's a question that's been addressed, and so I flagged it here for you, that there's a religious exemption. So say you're a Christian church and you also have an affiliate or affiliated, I'd say, Christian school, they may not be counted together. It's determined through either ownership, management, control, or identity, which is, I give you the legal statutes there, but what you're looking at is there the CEO, the president who controls the school? Is it the same person, the same board that's controlling the school and the church? And here they've laid this out for us. So you can see, just because you're, part of a larger creed or you've signed on to an interdenominational statement of faith, that doesn't make you all affiliates. Just because you have a common religious teaching or belief, that doesn't mean you can only apply as one consolidated entity. Now, how much money is actually available? Per application, per applicant, it's up to $10 million. And that is going to be determined by your average monthly total payroll costs for the last year, multiplied by 2.5%, 2.5. So if you had an average monthly total payroll last year of $4 million, you could actually apply for the full 10 million. If you had actually more than that, you would just hit the cap at 10 million. And you'll see I put an asterisk down here. So if you do have one of those EIDL loans I mentioned earlier, that will be taken into account, and you'll see that on the application form. If you don't have one, then you can just don't be weirded out by it. It's referencing that program, which is also still available, just not what we're talking about today. And what are the actual terms of the loan? Just running through it, it's a 1% interest rate, very low. It had been talked about actually being lower. It's not, it's 1% is the expected rate. Repayment term is 2 years. Previously, people had talked about maybe it being 10, it's 2. No payment, this is important, no payment is due on the loan for 6 months, but interest at that 1% will still accrue. Important, especially for churches and small businesses, there's no collateral required, no personal guarantees. And that's different, let's say, than the EIDL loan. And prepayment is allowed, and there's no fee on that. So if you decide that after 6 months you can pay off whatever outstanding balance you have, you're not going to be stuck, paying for that extra 1% interest that you've saved. You'll actually save it. So what is this payroll calculation? How do you know what number you're multiplying by the 2.5? You look at what are your payroll costs, and that's going to be both for your calculation for the amount that the loan that you request, and also what you're allowed to use that loan money for. So it makes sense, basically, based on what you were spending last year in 2019 for employees, we're going to give you that much and expect you to use it on employees or payroll costs. So payroll costs are including salaries, wages, payments for healthcare benefits, that's a big one, any retirement benefits, and actually payment of state or local taxes assessed on employee compensation.
So payroll taxes are included as a covered cost. Okay, that's very important to know. Okay.
Yeah, so you can include that. And also, so this is so you're calculating your loan request, it's the payroll, but if you receive the loan, what you can use it for will also include operating expenses, and that's rent under your lease agreement, your utilities, or payments of interest on mortgage obligations. And here's the big and bold, I put this at the bottom here, not more than 25% of that loan should be used, however, for non-payroll expenses. And we'll talk more about that because there's some advice and guidance that we'll discuss, but absolutely not more than 25% should be used for non-payroll expenses if you want it to be forgiven. So what's not included? Payments to independent contractors, which I talked about earlier. And that makes sense because if you have the applicant who is if you as an independent contractor can apply separately for your own loan, you shouldn't also then be covered with a secondary loan to another entity. Also not included, if you have an employee whose annual salary is in excess of $100,000, any payment on the principal of your mortgage or a debt obligation. So if you have a mortgage on your church, you can use your loan to cover interest payments, but you cannot use it to pay off the principal, which is to say that the government's not giving you money to pay off the actual underlying principal for your church, however, or your school, but you may be able to use it for the interest payments. Again, we'll talk about that because there's some questions about those interest payments for property, including real property, which is to say your buildings or your land. And additionally, any debt or obligations incurred after February 15 are not included. And that just means you can't sign a mortgage agreement in April and say, well, we didn't know that this, uncertain, dire economic time was coming. Because of course you did. So you can't start spending now. These have to be pre-existing obligations.
Right. Now, Emily, with regards to the salary cap at 100,000, so let me just have some clarity here. So let's say there's someone in one of these private Christian schools, and let's say they're making 125,000. So 100,000 of it can still be included, just nothing above 100,000. They're not completely eliminated from being a part of the PPP, correct?
Yes, that's right. No, they are definitely included. You just can't include a salary allowance of more than 100,000. So if you were making 200,000 or 500,000 a year, good for you. But also, you will only be treated as though you were making $100,000 a year for purposes of this calculation. So loan forgiveness, and this is the important bit. Amounts used, so once you receive your loan, amounts used during the first 8 weeks are eligible for forgiveness. And that's from the time the monies are actually in your account, not when you file the application with Wells Fargo or Bank of America or whomever. It's when you actually receive the money. For the next 8 weeks, if you use the money for payroll costs, which we define, interest on any covered mortgage obligation, rent obligations, utility payments. Again, these are obligations that were incurred before February 15. Now, that doesn't mean you can't pay for your lights in April. It means you can't have signed up for a new service, but those are ongoing pre-existing obligations. So any pre-existing obligations you can use for utilities, interest on lease or mortgage, and payroll costs.
Emily, on the loan forgiveness, I think that's very important for many people to understand. But I know some people are wondering, well, when is it going to be forgiven? I mean, do we know yet how much time it has to take place before that actually can be forgiven and off the books?
Sorry, say that again. I was reading a question that got in about you.
That's okay. That's okay. This is real time. So as far as the loan forgiveness goes, some people I know are wondering, how much time do we have to wait before it's forgiven and it's no longer on our books?
That is a great question, and I cannot give you a definitive answer, but it won't be more than 2 years, assuming you fill out your paperwork. So you fill out your paperwork, apply for your loan. In the first 8 weeks, you use your loan, very carefully, only for these allowed payroll costs. You submit your new paperwork saying, that here we've documented the costs, and I'll have a list of documentation for you here at the end. It could be, some people are saying maybe it will be 9 weeks. You finish and, you do your 8 weeks, you submit your paperwork timely, you're done in 9. Maybe this will be hanging on until, for the full 2 years, which is important. And I'm glad you asked that because with the religious considerations and religious liberty with regard to Christian or religious faith-based schools or churches, that's something we want to be very aware of. So it could be 9 weeks, it could be 2 years.
What's one thing that's really good to note is that it's not 10 years they could potentially drag it out. It's 2 years. And from a federal level, I think we're fairly safe from any barbaric ultimatums coming down from Washington, from this administration at least, with regards to religious freedom concerns for private Christian schools. So the fact it's not more than 2 years, I think, should be somewhat reassuring for private Christian schools. So.
Thanks, Brad. I can see we were getting in a question here about strings attached. It's like they can see my coming slides. Stay tuned. We will get there. So let's see, limitations. Oops, limitations on loans. The total amount forgiven, and that's the forgiven for those first 8 weeks, can't exceed the original principal amount. Makes sense. Only up to 25%. We discussed this above. I just keep coming back to it. Only up to 25% of the forgiven amount can be for non-payroll costs. So that's the utilities or the interest payments on your mortgage or your lease. If you have that EIDL grant, it will be reduced. And here's another big one, and we'll break this out for you. How is the amount forgiven reduced if I have decreased my full-time employee headcount, and also related, if I have not, let's say I haven't reduced my employee headcount, but I've reduced their working hours, and that will have an impact on what can and cannot, what will and won't be forgiven. And again, that doesn't mean you can't use the money. You certainly can. It's just it will be subject to that 1% interest rate until you repay it. So let's look at that first scenario. The limitation on loan forgiveness where you've decreased your headcount, which is very possible in these times, and part of the reason we have this incentive program is to keep employees working and keep them paid. The amount forgiven in that first 8 weeks will be reduced by decreases you have in full-time equivalent employee headcount. And you can see the calculation here, and I'm sorry for all the words, but that's how it works. Is effectively they're going to compare your period in 2020 with the same number of people you had working in 2019. And there's an alternative. You can see I've put another asterisk there. Actually, you can choose whichever period is more favorable. So if a comparison is better for you, looking at 2020 first quarter versus second quarter, you can also use that. And you'll see the same here for a decrease in hours. If you have decreased more than 25% your salary or wages for employees, you'll have a similar reduction in the amount that's actually forgiven. So let's see how that actually works here. An example then, let's say you had a monthly payroll of 400,000. So you apply for your loan, you use your 2.5 multiplier, you'll get $1 million total loan approval. Now let's say in the first 8 weeks, which again, it's got to be in the first 8 weeks, you spend 800,000 on payroll. That would be forgivable because that's under our payroll allowance. Then you spend 100,000 on rent or utilities. That would be forgivable because that's under that 25% cap. That would be forgivable. And then you have 100,000 that you haven't spent after the 8 weeks. You can return it, or you can keep it and pay interest starting at that 1% rate. So you can see just how those numbers would line up if you just using a hypothetical. If we keep those same numbers here, I've played it out for you with the idea that let's say you spent more than 25% on your rent or utilities. So let's say, again, you had that 400,000 monthly payroll and $1 million loan. Then in the first 8 weeks, if you spent 700,000, let's say, on payroll, that's forgivable. If you spent 300,000 also in rent or utilities, that's different because now we've spent more than 25%, right, on your rent or utilities. So only 250 of that is going to be forgivable, and the other 500 is not. And again, forgivable sounds judgmental or judgy. It's not that. It's just what actually is going to be written off and basically be turned into a grant for you. You absolutely can spend that other 50,000. It's just you're going to have to pay interest on it at that 1%. And the longer you have the money out, the longer you would be subject to any additional federal obligations with regard to hiring or anything else, which we'll come back to. So here you can see if you exceed that 25% limit on non-payroll, you will you'll have to pay the interest on it and pay it back. Question, will we have to make payments on the forgivable amount until they forgive it? No, not that I'm aware of. It's forgiven, so it basically turns into a grant, so it was not a loan to begin with, effectively. So let's look at another example here, and this is kind of a trickier one, but let's say you have that reduced headcount. And again, using the same example, if you have 400,000 starting payroll, you multiply that, you have $1 million loan. Again, let's say you spend 800,000 in that first 8 weeks on payroll, that's forgivable. But now let's say in this scenario, you spent that 800,000 on payroll, but this year you have half as many employees as you did in the prior comparable period, right? So let's say you can see here, let's say in 2019, I had 100 employees, but last year I had 200, I had 50. This year I have 50 employees. So we've dropped our employee count by half, right? So because we have only half the employment, we're going to half the amount that's reducible. So if we spent 800,000 on payroll this year, the reduced forgiveness amount is going to be 400,000. So we'll have an actual forgiveness amount of 400,000.
And once again, that remaining 400,000, they're only paying 1%. That's the rate. So it's very, very what we'd call cheap money, for in terms of them having to pay it out and to be able to deal with it. So this is a win-win. The worst case scenario, you end up with a chunk of money that you're paying 1% on, folks. So it's still a great opportunity, even if you're in that scenario. Go ahead.
Yeah, I think also on that point, Brad, if you spent 400,000 last year on your payroll, on your monthly payroll, and you've cut half your employees, unfortunately, it would be unlikely you would still be spending the same amount on payroll. So also just to note that there should be a corresponding reduction, though it still won't cover it because the intent is to keep employees working and receiving their paychecks. Here we go. The question, are there strings attached? To begin with, typically, and this is typically, small business loans are not available for religious-based entities. And I've just given you the general rule here. However, there's an exception for these loans. And this is from specific guidance we got from the SBA last Friday. And it says we specifically clarify faith-based organizations are eligible to receive these loans. And you don't have to be providing secular social services, which is say if you're a church and all you do is churchy things, that's fine. You're still a nonprofit eligible. And like Brad said earlier, some people have in the media, I think, have wrinkled their noses about this, but the flip side of that is it's not that it's favoring religion, it's treating religion like everyone else, which is to say we're not discriminating against you because of your purpose. And likewise here you see now loans under the program can be used to pay the salaries of ministers, and that's absolutely true. That's what they've said, and that's, I think, wonderful. But
yeah, Emily, I will tell you, I was very surprised when I saw that, and I'm just really glad that this administration chose to do that. There's some history behind that we don't have time to get into, but this will hopefully be something that will be looked upon in the future when government gives benefits and things like this to small businesses and others to keep religious institutions on an equal footing. It's a fantastic precedent, if not in terms of law, in terms of policy, public policy, to say the least.
Yeah, it's very exciting, especially given the current situation. Now here's where we need to pay attention, I would say, with regard to non-discrimination obligations. The catch is here, the string. Receipt of a loan through any SBA program will trigger certain non-discrimination obligations. However, and so that's the generally speaking. However, and here's where they carve out employment practices. No recipient shall, with regard to employment practices. So that's the general. That's the general rule. And here I've highlighted religion and sex for you because with churches or with faith-based schools, you'll see that as a sticking point. So if you go down here, however, let's see, here we go. There's the general exception for you. And with regard to general public service, so basically public facing services, you're not going to be exempted from federal obligations, which is say if you run a coffee shop or a soup kitchen, you can't discriminate with regards to whom you provide those services. But with regard to your employment and your internal ministry activities, you are generally exempted. And
Okay,
that's
so like Salvation Army, they could benefit, they could participate, so long as they don't discriminate on who they're providing services to, which they don't. They can still discriminate with regard to employment and still be covered under this. Same with, I guess, private Christian schools. Could they be compelled, though, to have to not discriminate with regard to the religious standards? Some schools are sort of whosoever will may come, will minister. Is it more of an evangelical opportunity? Great. Other private Christian schools are like, hey, no, the kids have to sign a statement of faith. The parents have to sign a statement of faith. They have to have certain moral guidelines, whatever. Parents can't be living together, whatever. I mean, whatever the circumstances may be. Can they still have those guidelines and still qualify under this PPP?
That's an open question, and it's also been raised with regard to schools. With regard to schools, whether or not Section 504 of the Rehabilitation Act of 1973, with regard to disabilities, whether or not if your school maybe doesn't think it's equipped to handle the special needs of a given student, would you be required to take them because you're currently under receipt of these federal funds? That's a question. That's the question, which circles back to the question that you asked earlier, and I wanted to highlight that, and I'll highlight it again here, which is that these obligations are not permanent. I think this might actually be on the next, it was on the prior slide. These obligations only last as long as you have the monies from the federal loans and they haven't been yet forgiven or repaid. So once you repay the loan or once it's forgiven, you're no longer bound by any of these obligations. So they're definitely temporary. So with regard to the question you asked earlier, Brad, about when, how quickly can I be out of this program, basically, it could be 9 weeks, it could be 2 years.
Right, and that time frame is important. That time frame, I think, is very important because if it's a short period of time, probably not a big issue. I mean, if they're forgiven by the end of the summer, then which I think, frankly, is a very good chance that they'll be forgiven before November 1st, ideally probably even before the next school year starts. Then it becomes a moot issue because school hasn't started yet, and what they do with regard to enrollment starting at the beginning of school really may not be an issue if the loan is forgiven at that time or shortly after that time. So I think that it needs to be looked at from its proper perspective. If we're looking at something that's going to be binding for sure for 10 years, 20 years, then there's a much greater chance that they're going to be targeted down the road. But that's not the situation here, which I think is very, very positive.
Yeah, one thing I would also note on that is if your school is a nonprofit, check to see that you're actually a nonprofit formed for religious purposes, because that's much more, you'll have greater protection. So you just have to look at your articles of incorporation on that. So
yeah, many it's a really good point. Many private Christian schools, like for example in the state of California, they often don't incorporate as a religious institution, but say for public service and things like that. Parachurch ministries often make that mistake as well. And it's very important that they make sure that they're counted as a religious institution, and that has some legal significance from our perspective at Pacific Justice Institute.
So as I mentioned, what documents do I need? Here you can see the types of information you can expect to want to have on hand, either in your briefcase if people still use those, or on your iPad when you go to the bank or when you make a phone call. And also, I want to note with regard to the articles of incorporation, that reminds me, I should say, if you're taking on a debt obligation, that might be the language you see, you should check your articles of incorporation or your governing documents to see what procedures are required internally. If you can have a meeting of the board or whomever it is that needs to authorize this incurrence of a debt or financial obligation, just to see if you can do this via email or if you need to have a physical in-person meeting, because that could be an important consideration.
Also, Emily, I want them to be aware that we at the Pacific Justice Institute have some model bylaws and policies that they should consider adopting. We've helped hundreds of churches with these already to help protect them on a number of different litigation issues because of the new controversial mandates and expectations that exist and that open them up for liability. And also we have some mission preservation policies that should also be reviewed on our website as well. That can be very helpful for their board. That's another topic for another day, but I want to make sure at the very least those listening are aware of those very valuable resources to help them from a liability perspective, to say the least. Go ahead.
Yeah, I'm just going to answer, just looking up, I see we've got a question, moral guidelines can still be used for staffing. I would say yes, based on the SBA's statement that they will not enforce the limits, the usual limits on employment non-discrimination. Specifically, I think if you saw that number 2, the limit the freedom of religious organizations to select individuals to perform work connected with that organization's religious exercise. So if you have the right to limit employment if you have moral guidelines and that involves staffing, you can cease that employment. So I would say that applies. Here's a quick chart I wanted to give you just for an overview. I know we've been talking about the PPP program. I guess that's redundant, but the PPP loans, just so you can see this side by side with the prior EIDL loans, which are still going. You can still apply for those. You can see at the bottom, it says they're available till the end of the year. But you can just compare some of the terms. The EIDLs are much longer. It can be up to 30 years. The EIDLs are can be for significantly less money. Interest rates are higher on the EIDLs, but they're also for a different purpose. They're not for getting money quickly into the economy to support our employees. So just for, I think it's useful visual. Again, you can also see the collateral and the guarantees there are quite different. So the PP program is much friendlier in terms of immediacy. Let's see.
Yeah, I want to just also just point out though, they should definitely take a look at the other program as well if they feel will qualify for based on emergency circumstances. I know many private Christian schools are suffering. Many will potentially be suffering this coming school year. As they're talking to parents who've lost their jobs, who won't be able to put their children in private schools potentially. So I think that this is something that they should very much be aware of and be willing to, at the very least, investigate. We'll have this chart on our website tomorrow at pacificjustice.org, along with this presentation to be reviewed. So if there's someone in your staff that you feel needs to look at this, to check it out, feel free to do that. And then, of course, you can always contact us. We'll be happy to answer your questions. Also, I want to make sure you're aware that next Thursday at 2 p.m., we're going to be addressing a number of the questions that have been brought in or will be brought in. If you have questions, you can email us at prez, P-R-E-Z, at pji.org. I'll say it one more time, prez, P-R-E-Z, at pji.org. And on our website, you can sign up to get our Legal Insider, which is our press releases dealing with cases and issues that do oftentimes impact religious freedom and private Christian schools, religious schools. Okay, so Emily, continue.
All right, we're marathon sprint to the end here. Contractual obligations. I included this slide based on some questions, and I wanted to just give some general guidance here. This is just a general legal issue. But with regard to contractual obligations with the canceled events, with people who may or may not be obligated to continue to pay their leases, probably yes. But it's worth looking at the terms of whatever your agreement is in question, just to see if you have, you probably have some type of what's called a force majeure clause, which basically looks at acts of God. You can see this is just a sample one here, terrorism, disaster, et cetera, et cetera. But it might be triggered, and if it's triggered, it means you might not be under obligation to pay. However, if it is triggered and you're not under obligation to pay, see when the actual date is, and if and when that date has occurred, to whom do you need to give notice, to make sure you give proper notice to the right person, so they don't quote lawyer you when you gave notice to the wrong entity. Also, the same type of issue here. If you look at your own insurance coverage for a church or a school or your business, you should see what your insurance coverage provides, because it may or may not include business disruption. Some insurance policies do, and some policies do not include virus and pandemic type situations. For fun, I'll point out that I'm a tennis fan, so the French Open and Wimbledon are both not happening. However, the French Open is going to be losing tens of millions of dollars because their insurance did not cover it. And as it happens, Wimbledon is covered. So they're actually going to be netting, forgive the pun, a couple £100 million actually. So it's worth checking your policy and to see if you're covered. Lastly, just for the sake of completion, I'm including a reference. As you're aware, probably the Education Stabilization Fund is also included in the CARES Act, and that includes $30.75 billion into 3 different funds, the bulk of which you can see is actually going into the elementary and secondary school fund, and also the higher education fund, which the first 2, the elementary and secondary, and also the higher education fund. I need to fix that arrow, but effectively there are 2 funds available for schools, and they can receive access to funds through your local education agency. There's a lot more information available on this, and I can point you in the right direction, but I just wanted to make sure people were aware of that. This is not direct access to those funds if you're a private school, but you are, as you probably know, entitled to equitable services. So that's something to be aware of and to start proactively coordinating.
Right, and it's very important to understand that this is something for private Christian schools. This is something that private businesses were not able to take advantage of. This is something that should definitely be looked at as we move forward. Now, Emily, first, thank you for the great job in the presentation. I know there's some people that probably have some questions that were sent to us at this time. Do you see any of those questions right now that you would like to address before we conclude?
I'm trying to see, I think I've answered most of them. There's a question here about why do you need 1099s in your application. I think the answer to that is if you're including 1099s in terms of calculating your prior year, that can still be part of your costs, right? Your overall costs. It's just that they're not going to be a covered cost or a forgivable cost. So you can still include that. It's just it's not going to be part of that forgivable package, because in theory, the independent contractor can apply themselves for that separate loan. Let's see, I think.
And as she's looking at these, if you have questions, email them to Prez, P-R-E-Z, at pji.org. Send them to me, directly to me. We'll make sure that we get back with you and try to give you as clear of an answer as we can. And mind you, this is a new ball game. Okay, I've never seen historically anything like this for serving religious institutions, like private religious schools, Christian schools. So some of this is going to be in the gray area. Some of your questions may not have as definitive an answer as we'd like, because this is a new ball game. That said, we have put a lot of time. We at Pacific Justice Institute have over 47 cases that I know of, at least 47 in active litigation as we speak. And yet our attorneys have taken the time to not only inform churches and institutions like schools as to what they can do regarding these mandates. We have customized memorandum for over 20 states in the country regarding the different ultimatums and mandates and limitations. We have great resources on that. But in addition, we've also put a lot of time into making sure that we've looked under all the rocks and boulders we can to get back with you guys and give you the information you need to make some very important and very impacting decisions as you move forward amidst this time of tremendous challenge. Emily, do you have any other questions at this time that you see that we can address?
I actually just sent out a reply. I just sent you all the link. SBA.gov is the starting point, but I gave you the direct site to the website so you can read for yourself. And it has on that link I sent you also has a find a lender tab. And I know people have been asking generally, how do I find a lender? What do I do? You can click find a lender, type in your zip code, or if you're me, I typed in my parents' zip code because I was curious. And you can see who's around you and what they're offering. So if your bank is no longer accepting applications, or if you have a credit union that's not participating, they can help point you in the right direction.
That's really important because I've heard from some churches and others who say, you know, I applied, but they said they're out of money, they're not doing anymore. And it's been a disappointment. In fact, some of the larger banks have been a bit of a disappointment in that regard. Or they'll say, okay, yeah, you can apply, but since you haven't taken out a loan, we're going to put you in the back of the bus. Or since you don't even have a financial account with us, we're not going to let you participate at all. Don't give up. There's banks out there, particularly on the local level, often some small banks. People will say, well, it's a small bank, they won't even participate. You may be surprised, they may actually be faster and more willing to work with you than the larger banks. So, but we have a very limited amount of time and a limited amount of money. That's why we weren't able to give more notice of this conference call, this via Zoom. We want to do it, we're thinking about doing it next week. That could be too late. And so I want you to make sure that you have all of the information you need to have. You're fully equipped to be able to make some solid, competent decisions. And then as you have more questions, once again, you can email those to Prez, P-R-E-Z, at pji.org. Any others, Emily, at this time?
I just got one. Can you apply for a lesser amount than you qualify for? Sure. Also, I think you saw in my first example, you don't have to, it's un-American, but you don't have to spend it all. I'm kidding. You can take what you need or what you think you'll need.
Very good. All right. Well, I think that's about all we're going to cover right now. Once again, next Thursday at 2 p.m. Please mark that on your calendar, and we'll send you information about that. Moving forward, if you have questions, once again, email them to prez@pji.org. We're a nonprofit 501c3 like you guys, and we appreciate those out there who just choose to support our work. But we do all our work unconditionally, without charge. Whether or not you support our work in any way, shape, or form is not relevant. We're here to serve you and to make sure that you are able to prosper in doing the call of God and serving the children across America with a fine, solid, biblical, moral education. Thank you for your time for being here. Our website, once again, is pacificjustice.org or pji.org. We've got the great resources regarding model policies, bylaws, mission preservation policies, as well as wonderful resources supporting what we've talked about here today. And those new resources are going to be available tomorrow. The other ones I mentioned earlier will be available today. God bless you. Let's continue to move ahead. We're here to serve you at any time. Always feel free to give us a call. God bless.